Hi everyone, in this video we are going to go over a cash flow problem that is going to require you to do the indirect and the direct cash flow method. I want to thank Kelly Dip again, who provided this practice problem for me, so that when you work in the software you would have already have seen a similar type problem. Okay, so this problem, one more time, is going to require you to do the direct or the indirect cash flow method. So what it does is it gives you an income statement, and then down below it's going to give you changes in the current assets. Okay? All right, so the indirect method, because we've done a lot of practice on that, I already have that on the board. Okay, so the indirect method, you would start with the income statement, which the net income is $59,700. That's your first number. Then you would add back any non-cash items. Well, depreciation is a non-cash item, so you're adding that back right here, the $6,500. And then you do the changes down the bottom. All right, so now you might not be clear just seeing at this. So here's what it says. Accounts receivable, it's showing positive. What does that mean? That means accounts receivable increased. Well, you know the rules at this point in time. So if accounts receivable increased, it's not going to show logical, you'll show that negative. Next, it shows inventories, and it's got a subtraction. So inventories is a current asset. It's not logical, so it decreased. You're going to show it positive. Next, you'll come to current liabilities. Current liabilities, before we begin, are logical. So current liabilities, the accounts payable increased, so that's why you're showing that positive. You'll analyze salaries payable. It decreased. It's logical. You'll show it negative. And then you total it down, so your total for the operating section for the indirect method is $71,450. Okay. The only difference between the two methods is the operating section. The only difference between the two methods is the details. In total, they will be exactly the same. Okay? All right, so last week we had some basic problems on how to figure out the cash amounts. Well, we're going to do the same thing in this. All right? So here's what they gave you. They gave you the income statement. So here's what we're going to find first. We're going to find sales. So the first piece that we're going to do is we want to figure out the cash amount of the collections from customers. So we're going to start with sales. The sales is $150,000. Okay. Next, I'm looking to see what relates to the sales. Well, accounts receivable relates to sales. So accounts receivable is positive. Remember, for the direct method, the collections are exactly the same rules as the indirect. It's the payments that are the exact opposite. Please remember that, especially when we come to the final time, so that you understand. All right, so accounts receivable decreased, so it's not logical. Accounts receivable increased, sorry. So minus, this is sales, minus accounts receivable, because it increased, and that's $3,500. So your total collections are $146,500. Okay? Got to do this first before we put it together. Next, let's do the payments to suppliers. All right, you're going to start with COGS. That will be your first number. What's the number for COGS? 64,000. That's a positive, right? We want to show this as it originally shows. All right, next, we're going to look to see what relates to cost of goods sold. Well, inventory will relate to cost of goods sold, and accounts payable will relate to cost of goods sold. All right, inventories decreased, so it's going to have the same rules as the indirect method, inventory is a current asset. So inventory increased, decreased. Oops. Okay. Just kidding. All right, this is a payment to a supplier. Payments are the exact opposite of the indirect method. It's collections that are exactly the same. So payments are the exact opposite. All right, so payments, current assets will make sense. If they decrease, we'll show them negative. If they increase, we will show them positive. It's current liabilities that aren't logical. All right, so COGS is 64,000. All right, so I am going to subtract, because it's going to be logical, the inventory amount, which is 7,500. Okay, what else relates to this? Accounts payable. Accounts payable increased. It's going to be the exact opposite, so it won't be logical. I'm going to subtract that. And after you do that, write that total down. Okay, so 51,000. You have to do this first before you put together the problem. All right, now we have payments to employees. So I look on my income statement. What is my salaries expense? That's my payments to employees. So I start with 14,500. Okay. All right, what else would relate to payments to employees? Well, salaries payable. Okay, so I see salaries payable decreased. It's not going to be logical because it's the direct method for a payment, so I will add that. So I go over here, plus 4,250, and that equals 18,750. Okay, now we're going to do income taxes. So I look for income tax expense. I go on my income statement, all right, and I start with 5,300 is my income tax expense, right from my income statement. Then I look to see if there's any income tax payable, and there is not. Okay, so that's nice and easy. Work exactly from your income statement, 5,300. Okay, so that's my final answer. All right, watch me. When you do these problems, here's what you do. Check off. Did I explain this? Yep. So I'm checking it off. Did I explain cost of goods sold? Yes. Did I explain depreciation expense? Yes, I added it back. Why? Because it doesn't affect cash flow. This is the direct cash flow method. So if you collect cash, it will be on there. If you pay cash, it will be on there. If it doesn't touch cash, it will not be on your direct cash flow method. All right, so now I got salaries expense, I check that off. And then I have income tax expense, check that off. I'm teaching you to do this so that if your final exam, you have an income statement, you want to make sure that you check off each item. Otherwise, you might miss an item, okay? So look at this. Income tax expense did not even have any effect on the current liabilities. Well, it still affected your income statement, so that's why you're just showing that 5,300. It's simpler, but if you have a particular expense that you haven't explained, still include it in your cash flow, okay? If it affects the cash flow statement. All right, so now I'm going to erase. We needed to do that first. So now I erase because I have all those numbers, all right? And you all have them as well. So remember that. Work in your notebook before you work using the software. Okay, so now we're just going to put it together. So here's my direct cash flow method. I have cash inflows. Okay. Here's one, collections from oops, customers, and the total is 146,500. Make sure to put your commas in, all right? Then, so my total cash flow, because that's the only item, that's a collection from inflows, is 146,500, okay? All right, now let's do the cash outflows. We have payments to suppliers, and that is 51,000. That will show negative, right? Then we have payments to employees. That will show negative as well. Then we have payments. Remember, we have already figured these out, of income taxes, although this one was really easy. We just took off what was on the income statement, and that's 5,300. Okay? All right. So, my cash outflows are 75 negative, right? 75,050. Okay, so then I take my 146,500 minus my 75,050, and that gives me my net cash provided by operating activities. Okay, and that is 71,450. Okay, exact same as the other side. Okay, so one more time, the only difference between the two is the details. That's it. In total, they will equal the exact same amount. Make sure you understand those rules, and then you will do well. Okay, so you're going to see a similar one in the software. Get that homework done. Have a good week.